Welcome, everybody, to another edition of ATLalts. This is your host and creator, Andre Sandate. I am excited to bring a special edition to my listeners today. I am joined by my business partner, Brian Cote, who's the founder and founding advisor of Gramercy Park Wealth Advisors, which is my firm. I'm based here in Atlanta, as you know, with ATLalts, and excited to have Brian join us today. We're joined today by three individuals who founded a very interesting private equity firm based in New England called DelCam Capital. We're going to talk today with Steve, Rich, and Stu from DelCam about this golden era of private equity, but more importantly, the golden era of manufacturing in the U.S. And why they're so convicted about this space. But before we do that, I'd like to give these individuals a chance to share their background. So I'm going to start with you, Steve. Welcome to ATLalts. Tell us a little bit about your background.
Thanks, Andres, and appreciate you having us on today. So Steve Trotta, I'm managing partner and founder of DelCam Capital. Based out of Boston here, did graduate school in Boston, spent the bulk of my career at Fidelity Investments in corporate finance, and started raising capital simultaneously while developing some real estate around the area. Ultimately pivoting to DelCam Capital, where we are today, and we'll talk more about that as this conversation progresses. But Rich,
yeah, let's jump over to you, Rich.
All right. Hey, thanks for the intro. So I've spent most of my career on the buy side, kind of bouncing around between hedge funds, mutual funds, private equity, private partnerships, a hedge fund of funds, and kind of just spent 20 plus years there and sort of sidestepped the great financial crisis of 2008. Fortunate enough to kind of see that one coming, and taught at on the finance faculty at a local university in Boston for about 6 years before rejoining the investment management industry in 2013. And great. 2019 met Steve, and here we go.
Awesome. And finally, I'd like to come to you, Stu Chanin.
Sure. So I started my career at Fidelity Investments as well. The corporate world is wonderful. I worked in the corporate finance supporting the institutional custody platforms that Fidelity has. But after 8 years, I decided I knew everything there was to know, and now I could go off on my own and do something more interesting and be more impactful in the world. So that's what I did. I joined a hedge fund. I became a partner in a small hedge fund. We looked at cash flowing companies. We looked at energy and energy related stocks. I did most of the administration for the fund. And 4 years later, I decided I don't want to wake up at 4 a.m. every morning and see what the markets are doing, because I'm worried about, some manager at some company making a bad decision and it impacting our portfolio. So
what you're saying is, sorry to cut you off. Yeah, so I'm going to cut you off there just because we got a lot we want to get through. But what you're saying is private equity guys don't work as hard as hedge fund guys, I think. I think that's what I heard.
I was trying to keep that part a secret.
Yeah. No, we know that's not the case. But Stu, I typically don't like to insert, but that was a perfect. You teed me up perfectly. Last but certainly not least, Brian. You founded our firm, Gramercy Park. We're a duly registered wealth advisor based in Nashville. We're starting to build our presence in Atlanta. I joined the team. Really delighted to have you join. Let's talk real quickly about why alternative investments and why non-traditional strategies, are so important to the future at Gramercy Park.
A key aspect to that is people are looking for diversification with non-market investments. And that was the big thing. And it's only grown over time, where years ago, we wouldn't have had access to a DelCam Capital. But now the ability is there to do that. And the ability is there to start with individual clients making those strategic investments. And, right. We look at an important part, and I know you feel the same way, that, really up to a third of a portfolio should be in alternative investments. And with the technology today, we have the platform ability to combine multiple ones together all in one portfolio.
Right. Yeah. That's well said. And I think to add to that, it's not just the diversification opportunities that non-traditional strategies and managers offer, but it's also alpha, right? We're looking for opportunities to generate outside returns or returns above that of the market, right? But I think three, it's also an opportunity to capture that illiquidity premium, which is certainly the case when you talk about private markets, things like private real estate, private equity. You're going to tie up capital for a period of time, but the investment, the trade-off, if you will, is we're looking for outsized returns. With that said, a key part of this for advisors who are listening and for high net worth individuals and for family offices in particular is manager selection and identifying managers who can have persistence of performance and be durable platforms and hopefully raise successive funds. And to do that, you've got to go look far and wide for that talent. And so today we're joined by a team here in DelCam that we believe is doing something quite interesting. They're focusing in manufacturing. And so, Steve, I'm going to come to you with this first one. The first and most important question that we start with at due diligence is, how does this team, in your case, a couple of folks that spent a lot of time in corporate America, corporate intelligence, corporate treasury, custody, and then Rich there in the middle with a markets background and hedge funds and commodities and mutual funds. How does this team come together, and why does the collection of the three of you, right, as a team, why are you the right team to take DelCam forward out into the marketplace and to raise capital?
So it's a great question, Andres. I think, we have an interesting combination of backgrounds, right? But I think first and foremost, it's about just the three guys who, are hardworking, are innovative. We have a great understanding of markets and businesses, finance, the importance of cash flow. In the case of manufacturing, physical assets. Right. I spent some time on the real estate side of the house. People love physical assets. I think the tangibility of manufacturing combined with our backgrounds and, our history and our track records of being able to provide, cash flow to investors all comes together and dovetails nicely. We're not folks that are about venture capital or risky technology investments. Right. We believe in what's real. Manufacturing is a big part of what made America, America. And we truly believe in kind of the future in the United States for manufacturing. You mentioned the golden era, which we'll talk about here in a few minutes, I'm sure. But, the combination of our backgrounds and, our thesis, I think, are compelling. And, thus far we've proven to have success, and we're looking forward to what the future has in store.
Sure. Yeah. Well, I want to give you guys one more opportunity before we jump into this notion of manufacturing and why, as a private equity platform, you feel like and have compelling examples really that we're going to dive into, but why manufacturing offers not only yourselves, but your LPs, more importantly, your investors, an opportunity to generate returns in a private equity construct, right? Can you point to a milestone or anything significant that was a real aha or a real, hey, we should really go and do this as a team and build a platform? Was there something in one of your backgrounds or multiple experiences maybe that you had that helped to take it from a concept and an idea to let's go build a business?
Yeah, when back in 2019, there's when Rich came on board and joined DelCam. We just love the idea of the manufacturing, the physical nature, the cash flowing aspect of these businesses that have been around for a long time. And part of the reason is because I have a family member who owns one of these companies who acquired a manufacturing company from a family founder.
Mm-hmm.
Right. My brother had owned the business for a long period of time. Well, at this point, it's been 13 years. Was around that business quite a bit, helping him out with some things. So I got exposed to manufacturing at the level where we started. And, I saw Mike, my brother, who's on our advisory board, quadruple revenue of this small manufacturing company that had been around and in business for 50 years. So that was sort of the aha moment for us. It was like, hey, there are multiple thousands of these businesses across the country.
Right.
Every street corner in every town in America has one of these businesses. They have blue chip customers. They've been around for 40, 50, 60. The longest standing business that we own has been in business for 80 years. They're cash flowing. They're not distressed. They have loyal customer bases. Right. All of those things these are good businesses, right? So why not? Why not?
Right. Us? They may not be growing at the venture or growth equity stage. So therefore, I think they probably aren't as attractive clearly to the investor that wants that high multiple and is looking for that big liquidity event through maybe the public markets. But they have lots of durable qualities, which we're going to talk about. Brian, I want to ask you, because we advise a lot of business owners. We advise a lot of people who are building the types of businesses and have built and sold the types of businesses that the guys at DelCam are running. When you're on the other side of the table talking to somebody that's running a manufacturing business, what's going through their mind when the idea of exit planning and beginning to think about what's the next step? What's maybe just a quick point, like what's going through their mind when they are talking to you from a wealth advisory perspective?
One of the key things that most of these business owners are looking for is someone to guide them through that process, because they haven't been down this road before.
Right.
And they're so focused on their business and adding values, in quadrupling the revenue like Steve talked about, but they're needing us to help and stand right beside them, join arm in arm, and then start to help them put the pieces in place to make sure that it's a very efficient transition from one to the other.
And a lot of times I think, we've heard it's important for a lot of times these sellers that the employees retain their jobs. It's important that they continue to work in those local communities. And I think we'll get into that here in a minute. So let's jump into it. I've kind of alluded to it and teed it up. We've talked about this notion of manufacturing and this golden era. I said in the pre-show, I've heard golden era of private credit, but I'll be candid with you, like the notion of a golden era of manufacturing. I'd love for Rich and Stu to give this perspective. Why DelCam and manufacturing? You talked about how it's got some durable qualities, physical assets, cash flows, long-term customers. These businesses have been around for decades, right? But you have to build a thesis around it, right? You've got to build an investment thesis that matches. And how does that align with the values and sort of your vision when you sort of put those two together? How does manufacturing fit in with what you guys are trying to execute on? Maybe Rich or Stu, I'll leave that one for the two of you guys to address.
Stu, you can take it.
How about you, Stu?
Sure.
Let's hear from you.
So I think when you're trying to build a investment thesis around manufacturing, two things to look at, right? One, why DelCam and what they're doing, and two, what are the macro tailwinds that are going to help them, right? So macro tailwinds, I've been through a lot of cycles. I've seen a lot of things in markets. You have boom and bust cycles all the time. When I was doing energy stocks, it was right before the Ukraine war broke out that energy stocks were beaten down. Nobody wanted them. They were selling at very, very low multiples. Everybody thought the world was moving towards cleaner energy and energy stocks were being left for dead. Then the Ukraine war broke out. We had an energy crisis, right? They flew, and they've been flying ever since. Now we have manufacturing, right? We just really had a bust cycle, I would say. We had COVID. It interrupted the whole supply chain. Many companies got pretty worried. They overordered, and they built up inventory so high that in 2022, end of 22 through basically now, they've been working through their inventories. Orders have been down significantly. The ISM manufacturing PMI that tracks manufacturing activity across the country has been in contraction for nearly 2 years. And here we are on the precipice of everybody having worked through those inventories. a new administration coming in where there's going to be other tailwinds that are probably going to help the domestic manufacturing industry. And we could be on the precipice of a boom cycle right here, right now.
Yeah.
Right. So that's the macro side of it. The DelCam specific side, just really quick. You have family-owned businesses that we buy. They are, generally lifestyle businesses. They gotten to a very nice point, right? When we come in, it's all about growth. It's about applying sales process, improving all kinds of operations, investing in technology, investing in automation, and really taking these businesses to the next level. We've seen it in our portfolio already. We'll get into a couple of examples later with the space age electronics and the sorting shuttle. But I think I love the model. We rely on our people for their technical expertise, and we rely on ourselves for our acumen and kind of knowing what we need to do for these companies.
Rich, I want to ask you to maybe round out that point that Stu made around, that there's the macro and the market side, but then there's also the notion of the operational improvements and implementation of things that maybe the ownership just have delayed investing in or haven't, invested in, things like process improvements and operational efficiencies that cost capital, right? That takes dollars. So it would make sense why an owner might delay those things or might wait to do those things until there's a liquidity event. When you look at the values of your firm, right? We talk about things like, or you talk about things like decisiveness and delegation and discipline, right? Then you go into things like perseverance and teamwork and accountability. Early on in my career, I used to look at this stuff and the mission and all this and think, do they really put thought into this type of stuff? And how does that really align with how they're investing? Because when the outside world looks at private markets and alts, they think it's just about making money. It's just about slash and get rid of people. It's not about all these other things. And when you talk about private equity, is it really about local communities? Is it really about trying to, share profits with employees and this stuff? So when you put together the values of the organization and you think about how does that align with the way you invest, the types of businesses you want to buy, can you just maybe elaborate a little bit and help us understand that from a investment perspective?
Yeah, absolutely. So I think one of the things that's important, Stu really sort of teed this up for me, is when we're looking at acquisitions, we're looking at not just the business itself, but also the culture of the people at these companies. And the culture really, it can't be overstated in terms of its importance. And we kind of view the culture of each business. Each company has its own character, and we kind of just take that and make it into the values, right? Like most of these companies don't have a value system that's been explicitly stated. So we really just observe and then write it down. And on top of that, we are we've bought into entrepreneurial operating system as a managerial tool. Mm-hmm. And we use EOS at every single one of our portfolio companies. And again, I don't think that the value that brings to the table can be overstated. A lot of these companies that we come into have not had a commercialized or an institutional decision-making process. A lot of it's been, a dictatorship.
Right. Very founder-led, right? Yeah.
Precisely.
Sure.
And, as private equity owners, we can't afford to do that. We need to rely on the people that have spent 10, 15, 20, 30 years, their entire lives in these businesses, and they'll know the inner workings of these companies better than we ever could. We're generally pretty smart business guys, and we're very happy to lead strategic direction of the firms. But day-to-day processes, the people that are actually doing the work need to have a voice at the table, and I think that's one of the things that we do a pretty good job of facilitating.
Yeah, no, we're going to talk about EOS and some of the operational pieces later on in the conversation, but let's talk about some of these drivers that could be propelling this renaissance around manufacturing. So we know that there was obviously a recent election, right? President-elect Trump is going to be back in the White House. He's going to largely have the support of Congress, right? He's filling the cabinet now. We're recording this here in the 21st of November, 22nd of November, and a lot of these things are taking shape. And you turn on Bloomberg or CNBC, Steve, and everybody's talking about tariffs. Everybody's talking about what does this impact of these cabinet choices mean, and what does that mean for the domestic economy? So I want to throw some things out that you and I talked about in sort of preparing for the conversation, things like tariffs, reshoring. Stu alluded to that with, what happened post-COVID when you just couldn't buy cleaning supplies, right? You couldn't buy things at the grocery store. You talk about federal initiatives and incentives, right? We had a gigantic infrastructure bill passed under Biden several years ago. Obviously, we can't do a conversation around AI without talking about the disruption of AI on manufacturing and other businesses. And then lastly, I think it was mentioned, like the energy transition, right, that's underway, and just this notion of, so there's a lot there, but what are some of the highlights that we need to be aware of as investors when thinking about the impact of those things on manufacturing? It sounds like as tailwinds for why this space deserves focused attention.
Yeah, so I'll take a shot at that, Andres. I mean, I think there's a number of things you mentioned. You hit on a lot of them, but
yeah,
I think a couple of things that we're focused on, as a result of a changing administration, things of that nature. I mean, first of all, we're heading into a lower interest rate environment, right? Stu mentioned the kind of the down cycle over the last couple of years. That directly correlated with a sharp increase in rising interest rates, right? That was coupled with that excess COVID supply hangover, right? And so that compounded the issues that we've seen over the last couple of years. But we're coming out of that, heading into a reduced interest rate environment. You put tariffs on top of that, which there's already tariffs that are out there, but any increases, in theory, at that high macro level should drive more manufacturing work domestically. Now, there's a lot of talk about, this is just a tax on goods and this and that, but it's supposed to drive more domestic manufacturing, which
right.
We believe that will happen.
Yep.
So that's really kind of a second key factor. There's going to be higher tariffs on the already existing tariff program that's in place.
Let's talk about this notion of reshoring, right? And everybody talked about that post-COVID. I just heard, analyst after analyst say, we're going to, all these companies are going to bring stuff back to America, and they're going to start manufacturing things back in America, which would seemingly be a tailwind for you, but that doesn't happen overnight, right? So what are we seeing around that?
Yeah, Andres, I mean, there's been a lot of reshoring conversation out there. I mean, the fact of the matter is there may be work that's moving out of China, but a lot of that is going to India, it's going to Mexico, it's going to Vietnam, it's going to other low-cost, production countries. Right now, will more of that work accelerate if there's a conflict between China and Taiwan? Will more of that move out of China? Will more of that move out of Taiwan? Right? We don't know yet. I think what's really driving some of the reshoring for the folks that we like to work with is, hey, we want to shorten our supply chain. Right. We recognize there was a disruption due to COVID. We believe there's value in working with folks that are close to our business and close to home. So we see some, tailwinds from that type of an effect. There will be more of that, no doubt, as things move forward.
Yeah.
So it is a thing. I think it will accelerate. Potentially accelerate even more depending on what happens, geopolitically. But you combine that with the interest rate environment, increased tariffs, an AI boom, more data centers being built. This administration talking about building 10 new cities in this country. More domestic oil production, transportation improvements and enhancements. All of that substantially drives manufacturing. So
Yeah.
when you combine all those things, just one of those alone can be impactful, but there are a number of compelling arguments to suggest that golden era, I hate to keep hitting on that, but
Well, I have said to lots of folks, and I'd love to have you comment on this, Brian. When you look at the number of boomers, baby boomers, and those that are turning 65 every day, those that are retiring, right? A lot of them, I don't want to speculate on the portfolio, but I think a lot of them are in the heart of probably some of the companies that you guys are talking to. So, Brian, when you talk to these aging owners, right, they're 65, they're 70, they've worked their whole life to build a successful manufacturing business. And now they've got to make some decisions like you talked about around exit planning and thinking about what am I going to do with my business? Are you seeing an uptick in, you've been doing this at Gramercy for some time. Have you seen an uptick in just the thought process for these owners of these companies to start thinking a year or 2, 3 years out? Hey, if I'm going to have a liquidity event, sometimes it's tax driven, sometimes it's regulatory, sometimes it's taxes, regulation, and estate planning that all come into that. But give us a sense for the temperature in the room for these lower middle market manufacturing businesses that you support from the wealth management side.
So I'll say one thing, and everyone knows this, as you said, a record number of baby boomers are turning 65 every day. One thing that I've noticed, I remind people all the time, when you hit 65, you're about to hit one of the longest stages of your life. People are living longer, right? So here we have these business owners that want to transition out of a company, and it's literally, I project, a 3 to 5 year process. And it can be challenging if someone offers to buy their company and they haven't done the planning. That sort of lights my hair on fire, and I have to act, 3 times as fast. And a lot of times it can't be as smooth. So people are realizing that they need to reach out to professionals early and start the smooth process. And every one of them I've talked to want to have their employees involved in ownership of the company. We're talking more about ESOPs now than I ever have before.
Yeah. And obviously, private equity, not the only buyer of these businesses, but certainly private equity with the amount of capital and the amount of interest. And certainly we're part of educating investors around the merits of looking at deploying a portion of your capital to the private markets, and private equity is a big part of that. That you want to be behind great operators. You want to be behind great sponsors. So I want to, it's pretty clear to me from this conversation, and hopefully to our listeners, that you guys are thinking very transformationally, and you're very much thinking macro, but also what are the big trends that are going to be tailwinds, and I think that's coming through as far as the macro background, the corporate finance background, the, being in these bigger enterprises, you can bring a lot of operational efficiencies. But we wouldn't be doing justice to DelCam until we spent the second half of the conversation talking about the investment process, talking about, how do you source, how do you diligence, how do you do, value creation. You alluded to operating, running EOS, but how do you do post-acquisition value creation? So let's hit on some of these things, because this is critical in looking at private equity platforms. And certainly I want to give you guys a chance to talk. Maybe I'll come to you first, Rich, and just talking about sourcing. Maybe Stu, you can hop in and talk as well. How do you find companies, and what's the methodology for identifying these great manufacturing businesses?
Sure. So we've been fortunate that we've had a number of different acquisition methods or the ways that we've made acquisitions of companies. So about a third of our acquisitions have been private, off market. Okay. We have a relationship with a buy side search firm that's looking for us. We have a national search out for potential targets. We have a number of relationships with local and regional investment banks. We have a lot of business brokers that we work directly with. And, the thing that I'm kind of most proud of, I'd say, is that we have a number of inbound inquiries. And, I really attribute that to the way that we've handled our first set of acquisitions, where, we're as you mentioned, these guys, a lot of the people that we buy from are founders of these companies. They've been in the business for 30 plus years in many cases, and they know who their competition is. They know the guy down the street. And when they have an exit, it's a big deal for them. It's kind of the only time they're ever going to do that in their lives. And, that gets around a little bit. So we've been, and the part that I'm proud of is that I think that we're good buyers. I think that we work well with the sellers of these businesses, and that kind of gets around the grapevine to the point where, we get inbound inquiries now. Hey, I know the guy that you bought a business from 2 years ago. I'm thinking about buying a business, I'm thinking about selling my business. Would you guys like to start a conversation? And that's great all around, right? It's good to have not be involved in a competitive process.
Right.
It's less expensive for the seller. It allows us to work directly with the buyer. It does present its own challenges because sometimes their financials aren't, vetted by or put through a banker.
Right.
So we have to do a little bit more work on our end to sort of play cleanup a little bit there. We have to dig a little bit more, but it's the private off market stuff is great, right?
Yeah. I mean, obviously that's the goal. If you can see more of those, but I think to Brian's point, we don't have to repeat it, but preparing to sell a business is a process, right?
Yeah.
Not just running the business, but then preparing to sell it to get maximum value is a process. So Stu, we can say manufacturing until we're blue in the face, but that's a very broad term, right? You guys are looking for niche manufacturers, right? Can you give a sense for why is there so much promise in these niche manufacturing businesses? And you mentioned the 30 years, the owner that's been running this, he knows his competition. She knows who her, who her partners are and knows the vendors. When you think about niche manufacturing, how important are things like relationships and the insights that those owners have or that you can bring to the table, or better yet, like as you grow your business, like sourcing those types of opportunities?
I think that they've done the hard work for us, right? These owners have made the relationships. They've acquired these customers. They've nurtured them over the years. And when we come in, it is extremely important that there's content, right? We want the people who have been serving these customers to continue to serve them and serve them in the same capacity. It should be like, from the customer's perspective, nothing has happened, right?
Yeah.
This is the same company that we've always worked with. And it's very important that we have a plan in place to make sure that operating the company not only improves, but also just stays how it was, where the customers know that they can rely on this company. We acquired Space Age Electronics. Now, here's a niche company, right? It's in the fire and life safety industry. They got started in the 60s. They make their own line of fire and life safety equipment. They outfit commercial buildings. It's a very niche space, right? If you're not in the building construction world, you're not going to know who they are. But
Sure.
If you're a fire and life safety integrator and you work for Honeywell or you work for Siemens, you definitely know who Space Age is. And every building that you install at, you're going to buy the products, right? So you want to be able to rely on them. And in many cases, some of their products are the only ones on the market. So you want to make sure that you're getting the right thing. I think with us, it was very important for some of the family who sold the business to remain in the business, and they are. One of the sellers has departed, but we made sure there was a very strong team behind them. One of the sellers remains as the chief engineer. Two of their sons are in the business, holding key roles. So I think that was one of the reasons why they wanted to sell to us. The buyer is very important. You don't want to change everything and tear the company apart just to create some value and sell it in 2-3 years. We have a longer holding period. We're really trying to preserve the family legacy. I think the customers can see it. I know the employees can see it, and I think that's what makes us unique.
Yeah, I think that's definitely a difference. So Steve, I'm going to come back to you on the other 2 points I made and sort of framing up this question, and it kind of goes to due diligence, right? When you talk about a manufacturing company that's been led by a team of very senior folks, they know their customers, they know their markets, they know the market trends, but they maybe haven't been on the cutting edge of investing in technology and systems, et cetera. It's got to make for, and if it's a specialist manufacturer, you talk about, life safety as an example, right? Like people know it if they're in that world, but you guys got to get up to speed pretty quickly. And that would mean a lot of due diligence, I would imagine, and a pretty comprehensive process to make sure you get good quality of earnings and you can really rely on the cash flows and the customer base, et cetera. So talk about that comprehensive diligence process, and maybe also as a sort of second after the due diligence, talk about sort of uncovering nothing that's hidden, but opportunities that maybe you sort of come into you didn't anticipate on the front end when you get into the weeds of looking at these businesses.
Yeah, no, excellent question. So, we have a rigorous due diligence process. The three of us can well cover the financial aspect of it, the forecasting, the financial analysis, the look backs, that sort of thing. That said, we have a third party that comes in and will perform a quality of earnings so we can ensure that deeper level audit is completed. We leverage a third party that has 1,000 employees that performs and helps us out with a market analysis, an industry analysis, competitive analysis, SWOTs, Porter, Pestle, all of that, right? A deep dive on products so we can get a greater understanding of what's happening in the marketplace, the competitive landscape, all of that. So, when we acquired Space Age, we have a systematic process. This team of third parties and ourselves come together to walk through these steps. One of the interesting things that we uncovered as part of the due diligence process with Space Age most recently, to answer the second part of your question, we have an audit and tax partner, Whipfly, who handles all of our fund audit, but they came in during the due diligence process to perform all the tax due diligence to ensure that the S-Corp election of Space Age was all buttoned up and that they had done that appropriately. And, Whipfly introduced to us the qualified small business stock program.
Mm-hmm.
Hey, you guys should really take a look at acquiring Space Age with qualified small business stock. There are, phenomenal benefits from a tax perspective for your investors. If you go down this path, here's how you do it. We'll help you comply with it. And we acquired the business with qualified small business stock. And, if we hold the company for 5 years, 10 times the equity investment will be federally tax-free. So, just a byproduct of that process, the due diligence process, led to our investors potentially getting a much enhanced IRR, if you will.
Yeah. Brian, I want to ask you, when you think about private markets and we look at managers, we talked about the importance of starting with the people and the team and who are the folks, at the controls, because you're talking about long-term relationships and multiple, hopefully fun commitments. When you hear folks dig in though to their investment processes, explain, if you would, from the wealth advisor's perspective, what does the client ultimately hear? What does the client, when they hear the story of a DelCam, for example, how do you present what you're hearing here today in terms of why, as an advisor, we should think about them or another private markets manager as it relates to how they invest and their criteria and their diligence, et cetera?
I think it's focusing on the dynamics of the investment. And truthfully, what I have found, clients are interested in learning the story behind what they're putting their capital into. And I think that's why I like the DelCam story so much, is the approach that they take. And when I speak to clients, one thing that they talk about is how do they treat the employees of these companies? And it's interesting because I had a discussion with Rich and Stu and Steve at a recent conference about that. And I was very intrigued that they are open-minded to making sure those employees are happy, but they have a vested interest in the success of the business. And once I talked to them about that, those investors are thinking, I feel like I'm investing right beside, in line with the DelCam team. And that's in essence what they're doing. And I think it gives them an advantage.
Yeah.
They're closer to it.
Yeah. So Brian, I want to be respectful of your schedule. Do you have a hard stop that you need to hop off for today?
No, I'm good. We're good.
Okay, great.
Yep.
Let's keep going then.
Yep.
Because I'm really getting warmed up, guys. And now I'm going to hit you with the hard questions. I love to tell people, like, we'll be kind for a while, but then we're going to bring the heat at some point in the conversation, because let's be honest, right? There's thousands of private equity firms out there. There's thousands of private market strategies and offerings. And as advisors, our job is to figure out who are the best of the best, who's a good fit, who can be durable. That starts with, again, for us, it starts with the people and the things we talked about. But at the end of the day, you got to create value. And it's no longer in private equity just about financial engineering, meaning you can't just go buy a company, load it up with debt, recap it a couple times, and look to sell it to the next firm. That still happens. Probably, though, it's moved way down market, where I know you're probably not focused, right? Almost in that entrepreneurship through acquisition, but where you're looking more in that lower middle market, there's more efficiency, there's more competition, there's more guys looking at businesses, everybody's executing on a specific platform. So to me, it's about what are you doing to create value after the acquisition, right? You make money on the buy, but where you really create excess returns for advisors, selfishly like us, is what are you doing once you buy the business? Okay. So this one's like popcorn. I don't care who takes it, but talk about the approach that you employ, and you alluded to EOS, okay, and on the EOS system. I'm a big subscriber to that. Use it in all of my businesses. Really think that it can be transformational in terms of a common language, a common set of values, a common process, which just many folks have just not been exposed to. Institutionalizing all those things, right, and taking out a lot of the emotion. So whether it's EOS, whether it's talent, whether it's intellectual capital, innovation, new markets, what are the things you're doing to create value at these businesses? I know we were going to finish with a couple of examples, but before we do that, I want to give you guys a chance to talk about that, because I think for a lot of folks, when they hear private equity, they, like I said, like Brian said, they still think, oh, they're just buying a business on the cheap, slashing a bunch of costs, loading it up with debt, and moving on. And that's not the case, right? That's an old reputation that private equity has. So I'd love to hear how you guys are creating value at DelCam for your portfolio companies. And I'll leave it to you guys to which one wants to take that.
Well, I'll take a stab at it, and then Rich.
Okay, we'll start with Steve.
We all want to answer this one.
Yeah. I know it's a fun topic, so we'll start with Steve, and then we'll go to you, Rich.
Yeah. So for the first 100 days post acquisition, we want to make sure that we are getting the EOS program off the ground. If you take a look at the DelCam values, Andres, you mentioned a few of them earlier, right? Discipline, decisiveness, delegation, accountability, perseverance, right? EOS perfectly aligns with our core values, which were established 5 years ago, right? And it's a way for us to, at a high level, get those values pervaded throughout the companies that we're acquiring. Now, Rich mentioned earlier, each of our portfolio companies may have their own set of values that are represented at the company level, but EOS really kind of embodies DelCam and what we believe in. So first and foremost, we get EOS off the ground. That helps provide each of the companies that typically have not had a whole lot of structure or planning or goal setting historically. All of those things come to light, through the EOS program. Leadership teams are established, which typically have not been in place. we're delegating the management of these businesses for the most part, right? We are involved in strategy and oversight, of course, but we want the people to take ownership. We believe that people will drive more value, employees will drive more value if they have more autonomy and there's a structured leadership team in place and a formal delegation process. So that's the most critical thing that we institute. Of course, throughout the due diligence process, we're looking at other opportunities. As an example, we were down in North Carolina this week looking at a target company for our second portfolio. And, we want to get eyes on the company just to understand in person how organized they are and things of that nature. But we also wanted to learn the nature of their systems, right? What do they have for an ERP system? Is that going to need an upgrade? Are there other things that we need to invest in that will add value, as we go forward? But, the traditional things that you think about, technology, sales and marketing, and people are three critical kind of pillars of investment that we look toward.
Right.
I would bucket equipment into that technology category, right? Obviously, that's important in manufacturing. So, we look at all of those things, assess what's really needed to upgrade these companies, and then create a plan. And EOS is really helpful at governing the approach, right? The first 3 months, we're not investing in every single thing. EOS is a system that helps prioritize what's most important, right? Because there's that saying that, if everything's important, if everything's the most important, nothing's really important. So being able to prioritize what we want to roll out first, it's going to give us our biggest ROI sooner in an accelerated fashion. EOS helps us with that. So I'll stop there, and then Rich and Stu, feel free to round that out.
Yeah, you've got to leave something on the table for Rich to nibble on. We're getting close to Thanksgiving, and I see you're the guy at the table to the next week that grabs all the dark turkey meat at my dinner. It's like, you got to save something for Rich and Stu here. I
make
think
the turkey.
One of the things that we've talked about is EOS, and that speaks to people, because when you introduce EOS, and I'm not an implementer, but it introduces a culture change, not a culture change, but it introduces a set of things from the standpoint of accountability and reporting and things that can be a little bit of a shock to the system. So let's talk about talent and intellectual capital or other areas that you think are really hallmarks, at DelCam.
Yeah. So I would argue that EOS does turn things on its head a lot of times. Because it is it can be a big change to some of these organizations from a planning and prioritization perspective. But I think the piece of the talent component that I'd like to touch on relates to the way we've organized our long-term incentive plan across all of our portfolio companies. So we last year implemented the ownership works model, where we the three of us take a slice of the general partnership and allocate it to every single employee at each of the portfolio companies. So all of the employees up and down the organization are owners of these businesses, and
so they're getting a piece of the portfolio
exactly
as a LP, but they're getting a slice of the general partnership. So they're getting diversification, if you will, for being an employee at Space Age across a portfolio of other manufacturing companies. That's interesting.
Correct. Yeah, exactly. Yeah. Correct.
Okay.
So, we think that does a number of things in our favor, right? It creates loyalty. If an employee, we make awards at year end each year. So the longer you stay with the company, the more awards you get. And anytime there's a liquidity event, you'll benefit just the same way the general partnership does on any exit event.
Yeah.
And also it helps create a mentality of ownership.
Sure.
Where, instead of just coming to work every day and sort of clipping your coupon, you're thinking more as an owner. This we're kind of early in rolling this out, but we're 1 year in. And, we answer a lot of questions about how it works. A lot of these people are sort of unfamiliar with the concept of shares or equity ownership. But, we try to do a lot of education. We try and reinforce it at our quarterly all hands meetings, make sure everybody understands what the process is. But, I really think that the bringing ownership to the entire employee base, really creates a mindset of accountability to everybody who works as part of our team.
Yeah, well, they're probably going to become like Brian and I, calling the GP soon and saying, when am I getting a distribution, right? Like, we had a realistic expectation here, but Brian, let's keep it real. I mean, part of the heads up with private markets is, there's that illiquidity premium, right? We are going to give you the opportunity to manage and steward capital for our clients. And as fiduciaries, we're going to do everything we can to make sure that capital is in good hands, right, with all the checks and balances.
Right.
But at the same time, we know that we are asking a client to tie up some capital for a period of time, 3 years, 5 years, 7 years. In exchange, we are making a calculated bet that this particular team and manager and strategy is going to return something above and beyond what we could otherwise find in something liquid in the marketable securities area, whether it's through a mutual fund or an ETF. So all that aside, Stu, you're a markets guy. You've spent a lot of time in the markets, expanding and growing these manufacturing businesses is got to be super important. You talk about sales and new customers. At the same time, we would be heads in the sand if we thought all your portfolio companies at all times are always getting record demand, right? I mean, it's just the nature of the economy. There's going to be some businesses and some sectors of the economy due to oversupply or due to tariffs or due to regulation that's just not hitting, on all cylinders. So can you talk about some of the technologies or some of the market strategies for that longer term growth where you're hitting the cyclical trend that you're employing at DelCam to ensure these businesses over a longer cycle are positioned to be market winners?
Yeah, well, you're absolutely right that there are cycles, right? And we've experienced them with our Fund One portfolio companies. In 2022, it was all we could do to get all demand out the door. Right, sales wasn't an issue. It was production, on-time delivery, and getting the work out the door. Our backlogs were, at record highs, and then you flip the whole thing on a dime. And 2023 is the complete opposite. Mm-hmm. Okay, so now your biggest customers are going quiet. Right, what do? Well, you have to really invest. You have to lay the foundation so that the rebound is that much better for you. So right. We did it in Fund One. You go full-fledged into sales, right? We have connected with all kinds of reps in many regions throughout the country as manufacturers reps, and invested on our own internal sales process with our sales and engineering folks to really go into the market, really make that push to get new customers in the door, work with our existing clients to understand, hey, what other needs do you have? And by the way, do you need anything that one of our other companies does? So having those conversations, putting EOS goals around those conversations became the foundation for us of what we were trying to do in 2023. And now I think we are really seeing the benefits of that. For instance, our plants up in Bow, New Hampshire, they have returned to a level of orders that they were experiencing in 2022. But guess what? The two largest clients haven't really come back yet. Okay. Yeah. And they will. They haven't left us. Their demand will come back, and it's starting to. We just started to see a couple orders. So now we're in the strong position where, okay, we've just increased our base. We know there's economic cycles, right? But now we're going to really capitalize on the upswing.
So, Brian, I'm going to give you a chance to weigh in here quickly from the standpoint of market updates, quarterly updates from the general partner, right? We get letters, we get access to data rooms, we get a chance to go on site and meet with the general partners. A lot of people's perception is that, I don't know if I want to go into private markets because I look at my mutual fund and I know all the stocks that they own. And if I want to sell the mutual fund, I can sell the mutual fund. Same can be said for an ETF. in private markets, I don't know. I'm speaking as an advisor. I don't know all the ins and outs of what's in the portfolio. I don't know how they're making decisions. I mean, we've heard here today how DelCam's doing it. We've gotten a chance to hear about some portfolio companies, but I want to ask you as an advisor, how are you getting comfortable once the investment's made with the updates to the portfolio? What are the mechanisms you've put in place at Gramercy Park?
What we try to do is on a quarterly basis, set detailed calls with the manager so they can give us updates. And the one thing you have to keep in mind, if you have a portfolio of multiple companies, you can only cover so much ground. So what we try to do is get highlights from them. And those highlights will continue because these are private investments that are going to extend over multiple quarters and years, after that. So I do the best I can at getting a flavor for what's going on. And believe me, it's positives and negatives, just so I can give clients an update on where it stands.
Yeah, but we track it and we have a full due diligence vault. So we're getting updates from managers that are both in the portfolio, but also managers that we're diligencing, right? So just like you guys at DelCam have a process, a funnel of sorts where you're looking at businesses high level, initial conversations, all the way down to those where you're obviously putting a term sheet out. Similarly, diligence at a high level. We just had the first conversation. We met them at an event. We just had an initial call, all the way down to we're going on site. We're really digging through offering materials and whatnot. So as we get ready to finish up, we've talked a little bit about one of the companies, Space Age Electronics, but maybe I'll come back to you, Steve. I want to give you a chance to talk about another business that's in the portfolio that I think is quite interesting. It's called the Shortening Shuttle. Can you tell us a little bit about this company, a little bit about why it was an interesting acquisition for the portfolio at DelCam, and some of the things that maybe you can share about it as a holding and some of the success you've had?
Yeah, absolutely. We love the Shortening Shuttle for a number of reasons, but great acquisition, right? We initially acquired a company that the same sellers owned. The other company was a precision sheet metal fabrication company. So we acquired that precision sheet metal fab company with an option to purchase the Shortening Shuttle.
Okay. So I got to stop you there, because when you said Shortening Shuttle to me, I thought this is a quicker bus from Logan to the terminal to get out of the, to get out of the airport, right? What you're talking about, you got to set the table and zoom out. What is the industry? Why is this niche? I mean, I say that tongue in cheek, but I think this speaks to some of the niche manufacturing and some of the businesses that are very esoteric that just on the surface an investor might just overlook and miss, but yet it's critical to the functioning of an everyday business that almost anybody could relate to. So I'm just asking you to sort of pause and sort of zoom up a little bit.
Yeah, sure. No, I appreciate that. So the Shortening Shuttle business, it's a waste oil carrier, right?
Okay.
That every single restaurant in the world that owns a fryolator that is cooking French fries or chicken tenders can use.
Okay, got it.
So it's a way for the back of the house restaurant staff to safely drain and remove used cooking oil out of the restaurant that subsequently gets picked up. So
got it.
Small business based out of Worcester, Massachusetts that we acquired, we forward vertically integrated it into our manufacturing facility. We've recently developed a new product that we're launching to market that's a battery operated filtration system, which will be the first of its kind on the market. So loving that innovation from our team. Our CEO just got back from a European tour. We were introduced to a contract manufacturer that will be making shortening shuttles for us in the European market. Believe it or not, Europeans eat a lot of fried food as well.
They do. And I lived in Europe, and, they're getting introduced to, good, better, and different, right? The Italians do not, contrary to Hollywood, they do not just eat pizza and pasta. Right. They do like their French fries, they do like their hamburgers. So much of it is becoming, maybe you start in Germany, maybe you start in the UK, but these markets are, they're certainly not monolithic, but they are substantial, right? And there's restaurants all over the place, all over the world, literally. So interesting. Can you provide maybe on an outlook, like when you buy a company like the Shortening Shuttle, you start doing some innovation, you start looking at new markets. Is this a 10-year plan? Is this a 5-year plan? Like, how do you even think about, because you got LPs and you got a fund, like, how do you think about the context of, like, how far can you go with it?
So this will be our first exit, right? I mean, we acquired the company at a fantastic and low multiple. They were already profitable. We felt we could accelerate that growth trajectory over a period of 3 years and, exit this company by the end of 2026, early 2027. We paid $1.4 million for the company. We think we'll exit around $15 million. So a 10x roughly return on the purchase multiple. We barely put any equity into it. It was the equity that we did put into it was, from the cash flow of our existing companies that we already owned. And, just this one, it will be the first exit for us. It's likely a shorter time horizon than the rest of our portfolio companies, but it just makes a lot of sense where it is in the life cycle. And there are a number of potential exit partners that are in the food equipment space. There are a lot of aggregators who pick up companies like this on the exit side. So we're really excited about it. We have a great leader that is running the company for us. He's done an outstanding job in the past year and a half almost, executing on the strategic plan. And we're loving it.
Rich, I want to ask you, that was a really great example that Steve gave on the Shortening Shuttle. And I appreciate all of your, detailed answers today. And I know we've certainly maxed out probably your time. You're busy, but I would love for you to maybe give a short version of space age electronics. I think Stu mentioned this in the life safety business, fire and life safety business. So obviously a mission critical manufacturer. Can you give some highlights of that particular deal and kind of the company and why it's an exciting portfolio addition?
Yeah, I mean, there's a lot. I can only touch on a few probably. First of all, it was introduced to us off market. So the negotiation phase was pretty straightforward, pretty easy, and we didn't have to liaise through a banker or a broker. And we got to know the sellers and the management team really well right off the bat because you start doing diligence with them immediately. It's a really excellent company founded in the 60s. It's a second generation family business. The eldest brother is kind of the driving force behind the sale. But I think as Steve mentioned earlier, we have the middle brother is the head of engineering. Two sons still work in, Stu mentioned, key roles at the firm. And, it's a very well-run business. And they have fully adopted hook, line, and sinker EOS. I mean, and this is the type of business that EOS was really designed for because they had a lot of really good sort of middle managerial people already in place. But now giving them a framework to execute against, just, you can see the excitement and energy at the first offsite and planning meeting. On top of that, we just think that the business itself is really primed for growth. They've really embraced automation. And so they have a sheet metal fab, and the automation side of it it's really incredible. It's beyond what you would think you'd see in a $20 million business. In fact, we work very closely with a global, very large manufacturer of equipment that is headquartered in Asia and has American headquarters on the West Coast and in the center Midwest. But on the East Coast, they don't have a huge commercial presence. So we're actually their Eastern showroom because of the level of automation that we've acquired from them and implemented into our operations. And just the scale and repeatability that the automation provides us there is it's beyond what I would have expected. And the management there, all the way down to the people on the floor, they're just really engaged, and I really just can't say enough about the people there. That's really what drives this business. We have an excellent sales force, and the other part of it is it's a very code-driven business, and good luck building or renovating a building without some space-age parts in it.
Yeah, for sure. So Stu, I want to come to you before we wrap up, and I'm going to give Steve the final comment, because Steve, your name's on the quarterly letters and those things, which doesn't take away from the importance of Rich and Stu's role, but I want to give you a final chance to maybe provide a highlight or two or some perspective of how you're actually giving investors a way to participate. So Stu, you come at this from the standpoint of obviously a deep career in markets, having spent a long period of time at Fidelity, which is well respected and a well-known institution globally. Some would say, oh, they're a very conservative family-run company. They're behind. They're just starting to do digital assets. However, been around for generations. Very safe place, arguably, for people to invest their capital, to have their capital custodied, etc. I don't want to put words in your mouth, but maybe talk about that and how that's infused into the business, into the platform, and or share a perspective on, what's exciting about what you guys are doing at DelCam now that you're into deploying out of Fund 2.
Yeah, Andres, as you said, Fidelity is a very conservative place, family-owned, private, protect your capital, right? And we do sort of bring that mindset to the table here. So when we're trying to pitch this to investors, I mean, what we say is, first of all, look at the cash flow component of our investment, right? You're getting an average of 15% annual cash distributions as a limited partner right back to you. So if you look at the typical conundrum with locking up capital for a long holding period, right, seven years or so, what's it going to be at the end? Well, at least you're getting your 15% a year, so you're really de-risking the investment as you go, right? You're getting that capital back, and that's improving your IRR, right? Because then you have that capital to deploy elsewhere. So that approach and us approaching, making these distributions, that's a very conservative thing for us to do. Would we be a little more comfortable and less on edge sometimes if we were retaining that capital within the businesses to give us more of a buffer? Yeah, sure. But I think for investors, hey, you have to give them incentive to want to do it, right? So yes, we would love to tell you our story. We would love you to buy into all the value we can create at these companies. And we really think we can right now. But hey, also, how about 15% a year, right?
Yeah, right. That helps. Well, people are looking for income.
Yeah.
Sure. Yeah, that makes a lot of sense. This has been terrific.
Absolutely.
For the sake of time, I'd love Steve, maybe give you the final chance to share a thought about DelCam. Bring us up to speed about where you're at in the evolution of the platform. I believe you're on Fund 2 at this point and deploying and giving capital back, as Stu mentioned. But share with us the evolution of the platform, if you could, and kind of where you guys are in the stage of building your private equity business.
Yeah. So thanks for that, Andres. And again, appreciate the time today. It's been great. So yeah, as far as DelCam goes, first fund is 4 years in, right? We launched our second fund, started capital raising for that early on in January of 2023. Made our first platform acquisition, Space Age. We've talked about that at length today, right? Made that acquisition in April of 24. We deployed 55% of the equity capital that we're looking to deploy in total at a minimum. So at this point, Space Age is off and running. It's doing really well. It's growing. We have a solid plan for next year. 14% projection for revenue growth, growing our EBITDA by 30% next year. Things are looking great. We're in the process now. I mentioned we were in North Carolina this week looking at a target company that's a possibility for us to move forward on a letter of intent. That could be our next acquisition. We actually have a talk this afternoon to chat through it a little bit in our investment committee. And we're full speed ahead, raising the rest of the capital for our fund. We have a couple of placement agents that are working on our behalf. We have the buy side agency that's sourcing deals for us, which is that North Carolina company. It came through that channel. So we're looking for things to dovetail toward the end of the first quarter, early second quarter on closing out Fund 2. We already have a fund thesis that we've been toying around with. We do expect to get a third fund off the ground toward the tail end of next year, possibly early 2026. Assuming all goes well with the execution with Fund 2 here and closing that out and things are on track. So we're excited about that trajectory. We have a lot going on. There's no shortage of things to do, but it's exciting, and we're growing and learning every day. And hey, as long as our LPs and our employees are happy, we're happy, and kind of where we are right now.
Yeah, that's great. Well, I want to give you a chance to tell us how people can learn more. How do they get in touch with you guys at DelCam Capital?
Yeah, so anybody can reach out to us at any time, email, or we're happy to provide even phone numbers, text, phone calls, whatever. All forms of communication are open. So we're not this big firm where an admin's going to answer the phone and gatekeep. Our investors have direct access to us at any time. So we expect to be able to be responsive when anyone wants to chat with us. And
that's perfect. Well, I'll put a plug in for folks. If you want to learn more about DelCam Capital, you can certainly check them out on their website, which is www.DelCamCapital. That's DELCAM, DelCamCapital.com. Obviously, all these gentlemen, as they said, are out there, accessible. Please reach out if you'd like to learn more. With that, today we talked about private equity redefined, the transparent investing in American manufacturing with the three founders of DelCam Capital. Thank you guys for joining me and Brian, Cote on ATLalts. On behalf of our team, we want to wish you and your families happy holidays ahead and a great season. And I look forward to having you guys back on, perhaps next year to get an update on, what's going on with the short shuttle and space age manufacturing and some of the other companies that I know you're in due diligence with. But with that, thank you guys for joining us today.
Hey, thank you, Andres and Brian. Thanks for having us, and happy Thanksgiving, and we'll connect soon.
Yeah,
thanks. It was a pleasure.
Thanks, guys.
Happy holidays. Thank you. Thank you both.